Mortgage rates last week were pretty ugly coming off the 3-day weekend. The bond market and mortgage-backed security investors continue to gauge where the puck is going next when it comes to the Fed and their monetary policy. The housing industry is strapped with historic unaffordability, the highest mortgage rates in 23 years, waning resale inventory, and shallow new build inventory coming to the market. Some of this is seasonally expected in the areas where inclement weather puts a damper on home sales, but these trends are troublesome for sunshine states due to their economics, not just the weather. Towards the end of the week, things evened out, but overall, mortgage applications are generally in decline year over year substantially, which then adds other pressures in the real estate system that we have yet to deal with. The Federal Reserve really has their work cut out for them this month. Everyone that's connected to financial markets, mortgage and real estate is paying very close attention to every word spoken by Fed members leading up to next week's meeting, not to mention the data that shows whether we are in line with Fed expectations or not, which in turn will determine whether we then see them pause or hike rates again this month. Despite there being bold confidence from both the rate hike and rate pause camps, this could actually turn out to be a toss-up, where they could kick the can down the road and yet again delay any such decision until their final meeting of the year on November 1st. What will they do? So when is enough enough? We're 18 months into the current Fed tightening cycle and still hearing that there's room for more rate hikes, and that elevated rate hikes may have to be held higher for longer in order to see the desired effects the Federal Reserve wants to see. Further, there's current data referencing rivaling past historic black eyes to make one think that they're actually going steady and maybe about to get married. Mortgage rates are their highest since 2000. Anyone remember the dot-com bubble? How about affordability is its lowest since 2008? What about the global financial collapse? And what about available inventory? Again, lowest since the global financial collapse. All these comparisons are pretty nasty, but rather than being jerked around by all the comparisons, all the real pressure is in the hands of the decision makers who ultimately determine whether we're lining up for further pain or gain hero status by getting us out of this mess. Which do you think is going to happen? So with that, let's take a quick look at what's coming up in the markets this week. Wednesday is all about the CPIs. Core CPI month over month, CPI month over month, CPI year over year. This will probably be one of the biggest data releases in recent history because the Fed has pegged this piece as critical to their rate hike or rate pause decision. Not to be outdone, Thursday will bring core PPI month over month, core retail sales month over month, and PPI month over month, retail sales month over month, and unemployment claims. As for all the month over month readings, these are all going to be critical to show the Fed momentum for the better or worse, which will let them know whether they should pause or hike rates at the next meeting. Coupled with the previous day's CPI data, these will likely be the determining factors. And I'm guessing they already know this prior to the release, and probably already know what they're gonna do during their rate announcement Wednesday, September 20th. Friday, we get the Empire Manufacturing Index and preliminary consumer sentiment reading, which both come out and will play second fiddle to all the inflation data that we're getting, but let's not overlook the impact of what these two readings actually mean in the function of the overall health of the economy, as they measure two different parts of the economy, but they do have a connection point between business and consumer relationship of consumables and spending health. And that's it for this week. Remember to like this video, subscribe to the channel, and turn on notifications so you catch every episode.